I'm Carmelo Pernesti with Nine Line Realty, and this video series is going to break down how to purchase a home for the first time. Or if you've already purchased a home, maybe you're thinking about getting a secondary home or an investment property. Stick around and let's take a look. Step 1, saving for a down payment and closing costs. A lot of the times, people automatically assume that if you're going to be purchasing a home, you're going to need 20% down. It's simply not the case anymore. A lot of the times, you can use what's called an FHA loan. Now, the cool thing about the FHA loan is it's a 3.5% down payment loan. So, quick example, 3.5% on a $400,000 home purchase. You're looking at a down payment of about $14,000. But we also have to consider closing costs. Now, closing costs can be anywhere from 2 to 3% of the total home purchase. Now, for quick math, let's do this. $400,000 at 2%, you're gonna be at about another $8,000 in closing costs and prepaids. Now, what are closing costs and prepaids? Closing costs and prepaids are things that we pay in advance a lot of the times when you're talking about a home purchase. So things such as title fees, survey fees, appraisals, inspection and due diligence, insurance, a lot of these things have to be paid up front. For example, you'll have to pay for a full year of insurance prior to closing on your loan. Also, the appraisal that the lender sends out or orders will be approximately $500 to $600 up front. Now, you can either pay this when it's ordered or at closing as part of your cash to close, but it will be considered a prepaid. And the last thing that we want for our clients is to be blindsided by these costs and fees that they aren't aware of. So that's what this video is really about, is to make sure that you're prepared and you're educated so that you know what's coming in a home purchase. And I definitely recommend you sitting down with your agent and making sure that you are ready to go when it comes to your transaction. Making sure you have the right amount of down payment and closing costs saved up just in case you need it all. Because a lot of the times we can do things such as negotiations with the sellers and get you some concessions, which are basically closing costs and prepaid paid for by the seller. We definitely recommend you sitting down and having a consultation with your real estate agent to make sure that you're accounting for all the funds that you'd need to complete the home purchase. Step 2, contact a licensed and experienced real estate agent. Now, for this, get some recommendations by friends, family, and colleagues who've recently purchased a home. See what are the things that they liked and didn't like about the transaction. Next, see if you can set an appointment with that real estate agent and ask them questions like, how long have you been selling real estate for? How much volume did you and your team do last year or this year to date? How long have you been selling real estate? How many homes did you or your team sell last year? Do you hold any professional designations? And if you're an investor, ask the agent if they have any investment property of their own, because chances are, if they have properties of their own, they'll be able to help you analyze deals more effectively. An agent investor might be the best choice because they have a lot more experience in many different aspects of real estate. And finally, make sure you're choosing an agent that you feel comfortable with, that you feel like you can talk to, that you can relate with. Because at the end of the day, it's a real estate transaction. This person is going to be consulting with you and you're going to be giving a lot of information, a lot of personal information. So the last thing that we would want is for you to go with an agent that you don't really feel comfortable with, especially when you're giving them personal information. Step 3, get pre-approved by a mortgage lender. Now, a lot of people don't know the difference between a pre-qualification and a pre-approval. And it's pretty simple. A pre-qualification, all it is you're telling the lender at a mortgage company approximately how much you make and what your expenses are every month. Whereas a full pre-approval is a little bit different. You're submitting W-2 tax information, you're submitting bank statements, W-2s, car note information, previous mortgage information. You're submitting all of this documentation to them so they can get a clear idea of exactly how much you can afford. Because at the end of the day, the last thing we want you to do is purchase too much home and find yourself house broke. That is not what we recommend for any of our clients. Talk to the lender, see what is comfortable for you as far as a mortgage payment, and have them construct a very, very accurate pre-approval for you. And choosing a lender is very similar to choosing a real estate agent. You want to make sure that this is somebody who's going to be communicative, who's not gonna disregard your emails, they're gonna answer your phone calls, and they're gonna feel personable when you're on the phone with them. You're gonna be spending a lot of time talking to these people, so you wanna make sure it's someone that you know, like, and trust. And maybe it's a referral from a friend, family, or colleague, or maybe it's a reference from your real estate agent. Now, your real estate agent should have a few great recommendations for you, so just ask them, who are the preferred lenders that you'd like to work with, that you've done business with before, that you feel that you can trust, and that will handle the transaction appropriately. Step 4, showings. Now this is the fun part. You're finally ready. It's been weeks, maybe months since you've started the process, and you're finally ready to start looking at homes. But don't waste your time seeing homes that you don't want to see. Get with your agent and have a meeting about the criteria and really hone in on the properties and the communities that you want to take a look at. Some of the criteria that you should include is how many bedrooms, how many bathrooms, do you want a 1-story, do you want a 2-story, do you have to have a fence, what communities do you want to live in, how far away from work do you want to live. You know, these are all of the things that you should be talking with your agent about so you can really hone in on the properties that you want to see. Remember, be picky. This could be the biggest purchase of your entire life. Step 5, writing offers. Now, this is really your agent's time to shine. They're the negotiators that are working on your behalf. I can't tell you how many times that I've heard that it's so refreshing from listing agents to get an offer that is written so well, professionally structured, and clean. To a listing agent, that indicates that an offer is going to go smoothly throughout the transaction without many hiccups. Make sure your agent knows what's going on in the market right now, because this is really what's going to dictate how the offer is structured. Now, once your offer is accepted, you have about 3 days to turn in your earnest money deposit into the title company. Now, the title company will give you instructions via email or phone call. This will have the information like the routing and account number that you should go to your bank and give them so they can wire the funds over to the title company. Now, how much is an earnest money deposit normally? Normally, it could be about 1 to 3% of the total purchase price. So, for example, on average, if you have a home that's about $300,000, the earnest money deposit is about $3,000. Now, that can change, of course, with how the offer is written, but normally it's about 1% of the total purchase price. If you want to show a seller that you're extremely serious, if you want the seller to know that you're extremely serious and you intend to close on that home, add extra to the earnest money deposit. The earnest money deposit is typically 1 to 3% of the total purchase price. Now, it can be changed higher if you want to show the seller that you are extremely serious about this home and you intend to close on the property. Don't worry, the earnest money deposit is not lost in the transaction. It's actually going toward your end total closing costs. Step 6, inspections. Now, as soon as your offer is accepted, you have normally between 5 and 10 days to complete your inspections. Now, the inspections normally cost between $400 and $600, and your agent can give you a few referrals on who to talk to get those inspections completed. Great agents will have a few companies that they've worked with in the past and they've developed relationships with, and they know that those companies are the best out there. But always do your own due diligence before picking or choosing an inspection company to do the work for you. Try to get this done as soon as possible so you can receive the report back in a timely manner to review it and make sure that there's nothing that you want to get fixed by the seller. Now, sometimes things that come back in the report are too big of issues for the buyer to have to deal with prior to owning the home. So this is also your chance to cancel the contract as well. And if you cancel the contract prior to the inspection period being over, you will get your earnest money back. If you and the seller can't come to terms about what needs to be repaired, this is also your chance to get out of the contract and receive your earnest money back as well. Step 7, the appraisal process. Once the inspections are completed, the lender will send out an appraisal order. Now, once an appraiser picks up that order, they will call the listing agent and coordinate a time to meet at the property so they can do the appraisal for your lender. The banks use the appraiser to make sure that they're not lending more money than what the house is worth. An appraisal will normally cost between $500 and $700, depending on the time in the market. The appraisal will normally cost about $500. A lot of the times, if you're financing your property, you will have an appraisal contingency structured into the offer. So that means if the property does not appraise for what the purchase price is, this is another way for the buyer to get out of the contract. But it's up to the buyer. They can also choose to pay. If the appraisal comes in lower than the purchase price, the buyer has the option to pay the gap between the appraised price and the purchase price. Also, if the seller is interested in reducing the price based on the appraisal, it could be a win for the buyer as well. If you're signing, or if you are thinking about signing an appraisal gap waiver, this is the document that says that you are, as the buyer, willing to pay the difference in the appraised value and the purchase price. If you're thinking about doing that, talk to your agent prior to filling out any forms that have to do with any appraisal gap waivers. This is the document that says if the appraised value comes in lower than the purchase price, you will make up the difference in cash. Step 8, underwriting. Now that you've gone through the appraisal process, the inspection process, you're going to be kind of on autopilot with the bank. Now the bank, what they're going to be doing is they're going to be asking for some documents. They're going to be really making sure everything is set to go with the closing process. So what that means is sometimes the bank will call you or they'll send you an email and they'll ask you for extra items. So this might be an extra bank statement. This might be a statement saying, hey, I made a large purchase a month ago and the bank is just wanting to know what that was for. But the bank is also going to be doing their own due diligence at this time, making sure that all of your financial information is correct, making sure they have all of their ducks in a row also to make sure that closing happens on time. This is also going to be the time where you go ahead and purchase your insurance. Get with your agent again on this process and find out which insurance agent that he or she has worked with in the past that have done great for their previous clients. Again, a great agent's going to have a lot of people in their background, such as insurance people, loan officers, inspectors, to make sure that the client experience is phenomenal. Now, keep in mind, when you're going through and picking out insurance, this is going to be one of those prepaid costs. Remember, this is one of those costs that's going to be paid for up front. As soon as you choose a policy with an insurance company, you're going to have to pay for at least 1 year up front. Now, sometimes they will not collect at the time that you submit and pick the policy, but rather at the closing table. This is one of those prepaid costs that we talked about in previous videos. Step 9, closing preparation. Now, this time is going to be where you, your lender, at the closing table, buyer and seller will both have separate closing costs. And like I said in previous videos, buyer closing costs could be anywhere from 2 to 3% of the total purchase price. And this is cash at closing. So this will be money that you either bring in a check form or you can wire prior to going to the closing table on closing day. Some of these fees may include the following. Now, a lot of time goes by while you're waiting for all of these things to be processed. But there's still a few housekeeping things that we need to take care of before you close on the home, like making sure utilities are all ready to be switched into your name, changing your forwarding address to the new home address, contacting cable and internet companies, and making sure that closing day you have internet, contacting cable and internet companies to make sure that on closing day you have everything switched over to the new property and you can watch your favorite YouTube videos later that night after closing. If you don't remember anything else from these videos, just remember to pick the right real estate agent. They will guide you through every step of the way. They will make sure that anything that you might have missed doesn't get missed and it's accounted for. They will relieve some of the stress along the way. Remember, we're professionals and we've done this many times, and we have policies and procedures in place to make sure that every transaction goes smoothly.
Guys, if you like this video, please click the subscribe button and hit that little bell icon next to the subscribe button as well, so you can make sure that you're notified every time a new video comes out. Again, my name's Carmelo Prenesti with 9 Line Realty in beautiful St. Petersburg, Florida. We would love to help you with any property purchase in the area. We service places like St. Petersburg, Clearwater Beach, Manatee County, Bradenton, Sarasota, Ruskin, Tampa, Hillsborough County. All of these places we service, and we would love it if we were able to help you as well. Please don't forget to email me if you have any questions. You can call me or text me as well. We hope to hear from you soon, and thanks again for watching.